Okay, good morning, folks. It is just turning into Wednesday, the 8th of July in the UK. At the moment, time for a video update. This is the gold chart, which I probably don't need to tell you is in a really nice bull trend, good recovery off the March low. A period of consolidation through mid-April to mid-June, and then we started to take off again. Of course, you get periods of consolidation in a bull trend, and gold does love these sideways periods and bull flags, so they are to be expected. Now, what concerned me was, this trend line, which I should just emphasize before I blow the chart up. This trend line going back to August 19, so pretty much a year ago, getting on for a year ago, 11 months, coupled with this much shorter trend line from April. You can see they intersect around, well, just around 1790, 1800. And I was really concerned that in such overbought conditions, we've been overbought for a while. Now, gold can stay overbought for a while. As you can see, it can stay overbought for at least a month while the market rallies. So I always advise don't pay too much attention to overbought, oversold indicators. In this case, it's a slow stochastic. But with this very negative candle that we had beginning of last week, this was a concern to me. New high, lower close, bearish engulfing candle. So I was worried about the retest, seeing a double top. Now, initially yesterday we did top exactly at that level and sold off to my support level, which was actually at 1772. We bounced just above that. And then now we've rocketed, which I didn't really expect. I did think that this trend line would hold and we'd have a deeper correction, but we haven't. So we're trading kind of on this trend line as I speak, but I think now a short position would be too dangerous. We have closed certainly above the trend line yesterday, as you can see quite clearly, and we're just sitting on it now. So really, bulls need us to hold above 1790, 1788 today. But even if we do dip down, I'd have to see a bearish engulfing candle before I would get negative on this again. And I'd certainly have to see a negative candle on the weekly chart on Friday's close as well before I got bearish again. So right now, despite overbought conditions and despite this trend line clearly did create resistance, we did hover below it for a couple of weeks, but it does look like now the chances are that we're breaking above it. So the outlook is going to be bullish for gold and the bull trend continues. Okay, dollar index is worth a look. Not too easy to trade lately. Well, not too easy to trade for a year or so, quite frankly. With the way this weekly chart, as you can see, that it was very difficult to hold any position last year for more than a week or two. Very much up and down choppy market in very much a sideways consolidation phase, and then of course we had this volatility in March. Anyway, moving on to where we are now, again more of a sideways direction in recent weeks, as you can see on the weekly chart. Now the red line is the 200-week moving average, and that has been offering really good support. Okay, yes, we did spike down below it on the second week of June, but since then, over the last 4 weeks, we have been holding this as a very good support level, perfectly in fact. So that comes in at around 96.50, 96.40, and again, as I advised my subscribers yesterday, watch for that to be a good support level. Well, we actually bounced off 96.56, so we didn't even quite get to the 96.50, 96.40 support area, but there you go. We have good resistance around 97.40, which has been holding for the last 2 or 3 days when we broke below it. So watch that 97.40, 97.50 area. Obviously, we're going to have to get up through 97.80 for further gains, but I think I favour just more sideways trading. I wouldn't be surprised if we held that 100 pip range from sort of 97.50, 40 down to 96.50, 40 for a few days longer. Unsurprisingly, the euro US dollar is sort of a mirror image of that dollar index chart that I just showed you, and we do have 200-week moving average resistance around the 113.30, 113.40 area. That's exactly where we topped, well, almost exactly where we topped this week at 113.45. Looking on the daily chart, you can see that we've got some support from the 500-day moving average down at around 112.07. I probably should throw some Fibonacci levels on here just to see where they come in at. I do like my fibs. There we go. So we've got a little bit of support around 112.36 from that fib level, but I think the key, the more important support level definitely is that 500-day moving average at around 112.10, 112.00. So again, maybe we'll hold that range for a little bit longer. This market does seem to like trading sideways And when you look at the weekly chart, really, this is just pretty much one big sideways trend for, I'd say, a year. Obviously, with this volatility thrown in over that whole coronavirus pandemic outbreak. But once you remove that, really, you can see, again, mostly a sideways direction for this market for a year. In my report yesterday, I had the best support level for the euro US dollar at 112.65.55, and I think I'm right in saying that that was near the low. What was yesterday's low? 112.57. Okay, so longs there did work. I'm just having a look at my short-term chart to see what happened, and we hit 112.57, and we had a good bounce back up to 113.07. So there was about a 40 pip profit in that trade. So watch that support level again today. Just a quick comment on oil, WTI crude. A few days ago, I did suggest that oil would start to trade sideways, and unfortunately, I'm right. I say unfortunately because the ranges have been narrowing, the volatility has been decreasing, which is pretty much what I expected as we approach the previous high, 41.63. That's the recovery high. We're not massively overbought, so I certainly can't get bearish. This isn't a huge resistance level, although it is the 50% fib, which if I scrunch the chart up a little bit, you can see around 41.25. That's what's held at the 50% fib. But I just don't see evidence of any big sellers coming into the market. So I think at the moment we trade sideways, we consolidate gains, and if this turns out to be a consolidation pattern, which it probably will be, then eventually we will break higher and we will at least close the gap at 42.17. Maybe even test the 200-day moving average at 44.80, although it'll be a bit lower by the time we get there. But for now, yeah, I favour sideways direction. I don't really see any big move coming just yet. Let's see if we consolidate a little bit further, and then I'll watch for the breakout, but I don't see that happening right now. I finish out with the US stock markets. The US stock markets, well, all the stock markets that I cover, actually, I've been calling for a more of a sideways trend recently, and that had been materialising, although I think that the recent rally, certainly over the last 2 days, was probably a little bit further than I expected on those on the US unemployment numbers, which were relatively strong. I called yesterday, actually here's the report that I wrote. I said yesterday there's a good chance we have topped for the time being. Watch first support at 31.56.54. Now then, we did reverse yesterday as I expected. We got down as 31.33. Let me see if I had that as a level. I did have second support at 38.35. So although we broke the first support at 31.56.54, we bottomed almost exactly at the next support level of 31.38. So as this is a sideways trend, it's always worth buying into a decent support level. Of course, the bulls always jump in eventually. So let's watch what happens with that level today. A break below 30 would be more negative. 31.26.23 is the next target, but it's not the next support level. So we could fall a little bit further than that if we break 30 today, but I don't see any huge risks to the downside. I know a lot of people think the stock markets should collapse imminently, but I don't see that myself. I favour more of a sideways direction, so I think it's a good scalpers market. Okay, yesterday for the Nasdaq, I said that the Nasdaq might consolidate, start to consolidate in overbought conditions, but there's no sell signal at this stage. In the second paragraph, I said breaking above 106.70, which I think was the previous all-time high, is a bull signal targeting 106.85 and 107. 10.700, 10.710. Now, where did we get to? Okay, we got to 10.694. So those levels certainly worked, and they did hold. And then we had a bit of a sell-off. I had first support at 10.595.70 and better support at 10.535.20. What was the low? 10.505. So we did test that better support level, and we did hold it. But we're trading around there now as I talk to you, as you can see from the chart. So we're going to have to watch that. I do think we're going to get a sideways consolidation phase. Probably not one quite as volatile as this consolidation phase. So I'll update the support levels in the report today and look for something. So I think buying into support would be is obviously the safest strategy, because we are very clearly in a bull trend, making new all-time highs almost every week in this market recently. But I think for now we're going to pause. So yeah, I would stick to buying into support levels, but I think we will get a chance to buy into those support levels because of the consolidation phase. You can't rule out a break higher in this bull market, so selling into resistance levels is definitely a riskier strategy. Dow Jones was not quite as easy as the S&P yesterday. I said that we'd hit the next target of 26,250, 290, and we're likely to trade sideways now. So that was a good call. We did. We reversed and turned around. But we broke the first support level, made it down as far as this level, 28.10, 28.810, 28.790, but actually we overran that level. So we got down as far as, whoops, I don't want that one on the screen. We got down as far as 25.740, so we did overrun that support level a little bit. The 200-day moving average doing its job there. That was the reason for my target, and the reason I thought we would turn around and reverse. We're not massively overbought, but we do seem to be already entering a consolidation phase. So I think more of the same, little bit lower, maybe into the end of the week. Nothing too significant, and then I'll be looking to buy into the index as we hit some good support levels, which of course I will revise for today's report. If you are not a subscriber and you'd like to see what we do, please go to daytradeideas.co.uk. Have a look at the website. There's a lot going on there. We also have an online training course which you might be interested in looking at if you are learning how to trade. It's been really popular, especially over this pandemic phase with people stuck at home. There's been a lot of subscribers and they've all been very happy. I do speak one-to-one with those who sign up for the course, so you do get to talk to me with all your questions. And anyway, lots of information on there, and if you want to subscribe to any of the reports, just scroll down. I do have a 2-week money back guarantee if you're not happy with the subscription, but there's plenty of markets to choose from if you're interested: stock markets, commodities, forex, and even a fixed income market.